Guys, welcome back to S&D Precision. Today we want to talk about NASDAQ. Let us talk NASDAQ. And one thing I want to tell you guys is that I said this even on the public group. Those people that don't know the public group, you can go in your Telegram, just type S&D Precision chart, then you're gonna get our chat room. So the things that you need, if you have like a proper focus, all you need is just watching the video that I'm posting in my YouTube backtest. Then you're gonna see the outcome is gonna be very nice. So today I wanna show you guys something on the NASDAQ, the way it looked, the way it is. I didn't trade NASDAQ today, but I got levels that high mark. I was looking to see the reaction on those levels because I was just focusing more on gold, GBP USD to see how market is going to react. And I end up even not taking all this movement because I was not even looking at it. So market just keep on playing on the levels that I mark. So I do pay more attention to supplier level and demand level. You see those kind of stuff. So this is the way my chart look right now, if you can check. So for people that they know me, I do trade more supply and demand, but I mix it with other stuff that I know, and you can check even on my chart. The first things I want to show you guys is let's say you are following your market structure. Let's say market is making the series of higher high, higher low, higher high, higher low. Then market is giving you something like this. So to get a reversal, to get a confirmation of saying market is going to buy or market is going to sell, one thing that you want to see is that market has to create a form of liquidity, and they have to run that liquidity. When they run that liquidity, this is when you're going to be able to catch the movement. So it's like market is going to create a move like this, let's say a drop. Then market is going to run this high, that was the higher high. So from this higher high, there is sometimes market is going to run the high, or market is going to fail to make an high. So market is going to do something like this, then market is going to go where it's going to drop. So for people that they know how to trade and you know how to take a risk, let's say you have your decision point. This is a decision point that you have there. Then market get at your decision point. So don't rush the trade, because some people, what they normally do is that they'll rush to take the sell from here, because they are scared of saying maybe market is going to leave them. So they catch this movement, forgetting that market sometimes is going to make a movement to go to the upside to come and take out this area. When they take out this area, they run your sell entry, because there on this entry, maybe there is so many people that they've been selling. So market to come and run that sell, then give you a mitigation at your block. If you know how to take the risk, you can take your first entry here, then, or if you want, you can wait for market to break. Let's say the way market break here, then market return to retest either on the level of QML, then you take your sell position there to come to the downside again. So this is how we need to look at the market. Because the moment you try to look in terms of rushing, you want to rush because you want to catch hold the movement, you keep on jumping. When you see a movement, you jump. At the end of the day, you realize like you're going to keep on missing so many movements, because you're going to catch only small movements. Let's say you catch only 20 pips here to come to the downside. Then market come and maybe you hit a break even. Imagine when you hit a break even or you hit a stop loss, already your mindset is like stop doing well. Then what are you gonna see? Maybe sometimes this is why you see people, they start trying to revenge the trade. So when they're trying to revenge the trade, then they end up start making so many mistakes. And you're gonna see if your market, let's say another person is gonna say, okay, since I take my entry here, let me wait for market to come here. Then okay, he's gonna come here maybe at my zone, then I'll sell. The person sell again, market run all the stop. Now that person starts scaring. He's not gonna take a trade anymore at this area. Why? Because He believe on his subconscious mind that this trade is gonna continue going to the upside, because after hitting a stop loss here, another trade hit a stop loss, and the person believe, no, I'm not gonna take this trade anymore. So when the trade now starts going in his way, like the way he wanted, then he say, the trade is going down. I took the trade here, they kicked me out. Let me jump again. So the person jump again. You see, he jump again on the trade just to go where? To go to the downside. Next minute, when you are done going to the downside, see what happened again. Market retrace again. Now the trade hit a stop loss. So this person who never gonna take a trade says, okay, I close my trade. Even me, sometimes when I hit a stop loss, I get frustrated. Then I say, okay, I'm not gonna trade. Let me just keep quiet. Let me just leave the trade. Then the person I leave the trade, then to see what is going to happen. Next minute, the trade get to your point of interest, then market goes your way. So this is what I wanted to show you guys. I'm going to show you guys this typical example of how market is buying and market is selling. Sometimes what you're going to see is market just go to the upside, down, fail to make a higher high, then market drop again. So what you're going to wait is for market to run the low, return to retest, then continue again to the downside. So this one is the one that is going to be your entry. And this is why you see this lady called Nora, she said, okay, she put a line here. Why? Because she do understand this logic of saying this is the time that you need to come and take the trade, because this one is a bit risky, but this one is a higher probability of market goes your way. You see those kind of stuff. So you need to pay more attention to these small details for you to take an entry. And also you need to understand, what is the price telling you? How is the price moving? Where is the last time where institution, maybe let's say they buy, they sell, for them to return back to the same zone to go and buy? You need to pay attention to all those stuff. So if you don't pay attention to all those stuff, believe me, you're going to have a big issue on the market. And so let us talk about what happened today. If you check here, what happened today is when markets open, I just want to explain it about today only, and because it's not going to be a long video. So since from yesterday, what I saw was after this Asian range, do you see where we have the Asian range? Market did trade to the downside. When you trade to the downside, can you see what happened? The things that I was explaining to you guys. Markets make this stop here. When market make the stop there, when market make this stop here, then check what happened. So people, they rush to buy here, market goes to the upside without having a confirmation, without understanding what is happening in the market, because they see a reaction. For someone who see this reaction, this rejection, I'm sure the person is going to jump here on this new candlestick, because according to the person, this rejection is like market is already showed the direction that is not gonna sell again. So market is rejecting, so let me jump. Then the person jump. So when the person is jumping from here, then market goes all the way to the upside. Now check this candlestick. This candlestick, when it's open, check the way it sold. It sold so huge to run all this low. The next candlestick, start buying. As a trader, what do you wait for? If you don't know how to take a trade, let's say here down, what are you gonna do? You can even wait for market. Just keep patient. Just keep patient. Market is never gonna leave you. Market always make sure to come to your level. When you see this break of structure, then markets break a level. So let me just clone this one. Market break a level. We have a break of structure. Then we need to understand where is the last point that lead market to a break of structure. So the last point that lead the market to a break of structure is this one. This is the area that lead the market to a break of structure. You can take a trade here. You can come and refine your entry. Let's say if you are so aggressive, you can say, okay, I'm going to take the entry at the open price. Or if you want, you're going to say, okay, I'm going to take the trades, let's say, maybe at the 50%. You can put another point where you want to take your trade. Let's say the 50%. What is the 50%? You're going to say maybe somewhere here, this is the 50%. Okay, all my stop loss maybe can be there, and you target the eye. So it's either you're gonna open 3 position at this level like what I normally do, then my first TP is going to be where there is a break of structure. Why there? Because this area is the one that give me this low point. So when market is buying, I always apply discipline. So I want to see market run first this level of liquidity. When they run that higher, the external liquidity, then I'm going to collect my profit. It's either I'm going to collect 30% or 50%, sometimes even 70% of my profit is going to be out. Then I'm going to leave the other trade to see where the trade is going. You see, even if markets come back and eat my stop loss, I don't have a problem because I've already collected part of my profit. And there is that mistake of people, what they're doing is that they hold all the trades, then market goes their way and come back, they still believing market is going to continue, market eats stop loss and change direction. Then you start crying, why I didn't close, why this, why that. You see those kind of stuff. So you need just to pay more attention to what you are doing. Then in this case, what do you see? We have the break inside this range from this high to this low. Then we have the break of structure again here. Do you see how market was coming here? So if you want to gonna put this one, we call it like a momentum line. You see a momentum line. When market break a momentum line, what do you expect for? Market has to do what? Has to come back. Then markets come back inside this area. We have this price imbalance, the one that was here. So price come to fill this level. If you don't know how to buy here down, you could buy here to go to the upside. But what do you expect next? This is the area where markets, so lead the market to break this level on top. So it's already where institutions, they sold for the last time before they buy. What do you have in your mind? There is money there. So they have to come back. You can even say, okay, I'm going to put my pending order here and my stop loss below. Let me see what market is going to do. But check what happened again. When market was going to the upside, this is what we learn in supply and demand. Market push to the upside with a rally, then create a base, then market rally. So when we have this rally base stuff, let's say market goes like this, create something like this, then push to the upside. What we expect next is for market to come back to this area, then continue again. So this is what happened. So we have this level, we have rally, market create a base, market rally again. So we expect market to come for the first time on this zone to buy and target this level. Either they will come, they fail to take out this level, or run the eye, then drop again to any significant level that was in the original movement. Let's say strong demand level, then market has to come. Same apply to supplier, where we have a drop, base, drop, then markets come back to the same zone, then mitigate, sell, those kind of stuff. So from here, what we see, guys, I'm sorry I said the video is going to be short, but let's continue going a long one. So from here, what we see is that after market create this base, then markets push more to the upside. Then we create the Asian range. So from the Asian range, markets want to seek liquidity. So what do you wait for now? You want to see how market is going to react at your zone. But remember, I told you, before you take a sell position or a buy position, you want to see, in case of sell, you want to see market come to the downside, buy, return back, either run this low here, then this level here, if it's going to come to mitigate your zone, this is why you take your sell, your buy position to go to the upside. Now check what happened on this zone. Market gets here for the first time, touch the zone. Yes, we can buy here. As long as you know how to manage your risk, you can buy. But check what happened here. They break this area, then markets come again all the way to the downside, inside our zone again. So this time, I could refine my entry. Or if I want just 3:30 as I normally follow also the time, this 3:30 could be my perfect entry, because if I go to M5 on this area, I'll get a proper level. Where I could refine how I get my entry. If I go to M5, guys, you see, let me show you M5 so that we can see on that zone what happened on that zone for us to take a buy position. Do you see on M5 what happened here? We come, we create this low, people they rush here, market run to the upside, return back to run this buy, the people that have been buying there. Then here could be my entry. Then I'm taking my entry here to go to the upside. You see, here we refine another entry because market respect the 50% of the Asian range, then drop. So when we drop, we are dropping to where? Because if you want to reduce our entry now, because due to the market comeback, because this is a low time frame, do you see now we could use this one? Even our stop loss could be small because we already refined an entry on the proper level where market has to come. And why market come here also, if you check on the low time frame, you're gonna see we have a break of structure here. Market run this higher point. This is why we come back. This one create just a liquidity. You see the level create liquidity, then we come and run that liquidity, then we buy. So market is buying. When you are buying here, what is your first target? My first target is here. My second target is there. Market goes to the upside. Then before we come back again to the downside, what do you see? Market already starts showing you a signal that, okay, I'm about to reverse. Market buy, make this stop. Check the pullback. Can you see this pullback here, the one that happened here, compared to all this one? Do you see how it's different from this one? So already the signal that, okay, market is about to do what? Market is about to sell. So we want to see how market is going to run the eye that they created. So market create this eye, market run to the upside. If you check, almost this one was inside the New York kill zone. Inside the New York kill zone, then you could just wait to see how this candlestick is going to close. The next one, check here, we have something called a rejection block, whatever. Then check how market continue dropping, drop until this area. So let me go to M15 again. Then you could see how market drop. Check how market drop. How many candlestick? 9:30, this candlestick open. People that they rush to buy, they buy here, they are saying they are killing. Next minute, this candlestick, the wage drop. Do you see how this candlestick drop? So always consider the first movement as a fake movement to induce people in the wrong side. And if you check even again here on the London, when London open, here markets just sell all the way. 3:30, somewhere here, then we get a buy. Do you see how market buy? Then return again back before New York open. I think New York open on the next candlestick. Then we start buying to go where? To the upside, so what we can sell. Then New York just start buying, going to the upside. When the stock exchange open, check the way market did drop. So market drop again, gets on the strong demand. Check how market react, because this level was the one that lead the market to a break of structure. So this is why we see market return back to this zone again. Then we start doing what? We start buying. But why do you have market that is reacting on this zone? Because if you check here, when we break this level, so market has to come and react to another level where we have a supply level. Because here we have a drop, bears drop. But this one was a fast mitigation. We call it a fast mitigation. So markets return back to come and mitigate already a level of demand. A level of supplier. We mitigate the level of supplier, then the market drop. So when market is dropping, what do you see? Then here we start again buying. So market gets here again, then react to it. So far today was just a game of liquidity, because market was just seek liquidity on both sides. Asian high and low. The same thing that happened here, it's happened also on gold. It's happened, I think, on USA 30, because those are the things that I look at. USA 30, gold, those kind of stuff. So let me show you guys gold. Let's see, gold. Okay, wait for it to open. Yeah, so This zone here, the one you see here, was the zone that I identify on M30, was a doji. So market's supposed to come and balance the doji. According to me, market has to come and balance that doji. Do you see this doji? So I was anticipating market to come and balance it. So this is why we have this price balance. Then market return there. Oh, sorry. Market return there and balance that price. Again, what do you see? We have the Asian range of the previous week. Sorry, the previous day was Monday. Market run to the downside, then we start buying. We buy with the target of taking this high. When you took the high, the other Asian range begin. What did I tell you guys? Before market reverse, market has to do something like this. Always pay attention to these things. Then we run that one, we reverse with the Asian range. So markets then drop again all the way to the downside. Here we start buying. So what happened here is not like I hit a stop loss from where it is. So what happened was I took a buy position. So my first buy was, I think, was in this candlestick. My first buy was in this candlestick. Market kicked me out. I took another buy again on the open of this candlestick. Then I let the market goes my way. I think it was on M5 where I was looking at this. So then I decide, when market was going, I decided to update my stop loss somewhere here. So this is what happened. This is what you see. Markets come back and hit my stop loss. Then goes my way 140 pips, guys. So when it goes my way 140 pips, I was also anticipating to come and sell again from this area. And my stop loss was just, I think, was 95. What is 95? No, it was 15, I'm sure. Yeah, that was my stop loss was there. Because why I cannot put a stop loss inside? Let me show you M15. I cannot put my stop loss in above my zone. So let's say I just put my stop loss straight here. No, that I'm not gonna do that. Why? Because I know this zone here, market has to run the Asian range high for liquidity, because there is a stop loss of people that they sold yesterday. So they are targeting the stop loss, because here people, they still believe that market is not going to come to my level, or market is going to get here and start doing what? Selling already. Do you see those kind of stuff? So you need to pay just attention to whatever eye that you have. Again, market run this level, drop the same pips again to the downside, straight inside this price, the one that I was talking about, to come and balance the price. So the only thing that you need to do is just to pay more attention to whatever you are doing in the markets. Don't rush. Sometimes even me myself, patience do kill me. Why? Because I was anticipating market to do what? To buy, but I rushed the buy. You see those kind of stuff. So I did rush the buy on this candlestick. I did rush the buy, but when I go to my time that I normally look for market structure for me to take a trade, you see what happened? You see what happened here? So from here, I didn't even wait for market to give me all this. When this happened, I was not even in front of my computer, but this is how I do trade. I want to see market run the low with this one, run the low, break structure, then market has to return back so that I can do it. I can take my entry. This is what I want to see. Because I took the trade from here when market was coming to test this candlestick, I took the trade. Then I update when it ran all this move to the upside, me update my stop loss here. Then I say, okay, this is where market has to do it, has to come. Then check what happened. Market come already. It's like I was calling for market to come to my zone. So market just come to my zone, hit my stop loss, then fly to the upside, guys. And fly to the upside. I think the last one was GBP USD. GBP USD was also a bit crazy, but it was a nice trade also today. A nice trade to make a bit of money. Let me go to M15. This one I was angry with it because it did buy at my zone when myself I was not even on that trade. So I was crazy. This was like previous week that I sold. I think it was not this one. GBP/USD, and it must be this one. Okay, do you guys see? This was my zone that I was waiting because I saw the MPL King. This MPL King, most of the people, they know I trade this MPL King because I sing about this MPL King for so long, teach people about it, show people what they have to do if when they see the MPL King. But market get here, I miss my best trade. You see, guys. So this was inside the Asian range, whatever. It was also another MPL King. If you check here, just another MPL King. Then from here, yeah, market did come back here. We sold just to buy. They buy small, then they sold again huge to come to the MPL King inside the New York 9:30. You know, this movement always be crazy because most of people, when they see this, they rush all this sell. Market is going to sell, market is going to do whatever it want. But check what happened. At the right time, market starts going up. Again, what do you see? London open. We sold all the way to the downside. Then 3:30, we print this candlestick. The next one, we just wait by. We get here then. So anyway, guys, this is what I wanted to show you guys for today. Today was not a successful day for me because I took few trades. I just win like 2 trades, but the other one they hit a stop loss. It's part of the game. It is what it is. So the fact is there, we just get strong every single day. So I repeat again, guys, if you get all the way up until this level, is just keep practicing, keep going through the materials I'm sharing. I know people that don't show this stuff I'm sharing on YouTube. Most of the people, they want you to come and pay them so they can teach you what I'm showing. I do these things for free. I share with you guys because I want to see you guys going forward. I see you guys going forward. I know I used to do the mentorship, but for a time that I decided I want to stop facing mentorship because I want to help also those one that are on need of me helping them. And those one, they will need me to assist them. Maybe later on, I'll see what I need to do. Because some people, they still believe, no, these things, how is it possible for someone to share something for free? So there is some things hiding. Yeah, so sharp guys, enjoy the video and make sure to backtest.